Alright guys, today let's use Warren Buffett's mentor Benjamin Graham's stock picking method listed in the famous book The Intelligent Investor to look at the China telecom giant China Mobile. The first requirement is adequate size. China Mobile's market capital is 2,400 billion Chinese yuan, ranked number 1 in telecom industry. Its annual revenue is 1,000 billion Chinese yuan. Its size is adequate. Number 2 is strong financials. China Mobile's debt to stock equity is only 0.8, satisfying the less than 2 requirement. Number 3 is earning stability. China Mobile has been profitable for 26 consecutive years, meeting the 10 years requirement. Number 4 is long enough dividend record. China Mobile has paid dividends for 23 consecutive years, also meeting the requirement. Number 5 is earnings growth. In the past 10 years, China Mobile's earnings grew by 19%, falling short from the 33% requirement. Number 6 is moderate price to earning. China Mobile's past 3-year average price to earning is 19.7. It's a bit higher than the less than 15 requirement. And number 7 is moderate price to assets. China Mobile's current price to book value is 1.7, also a bit higher than the required less than 1.5. So we can see that on earnings growth, moderate price to earning, and moderate price to assets, China Mobile is not meeting band's requirement. Next, let's calculate its intrinsic value. The way I calculate intrinsic value is by adding up a company's current liquidation value with the next 10 years total dividend. So if we assume China Mobile can grow at a 10% per year super high rate, its intrinsic value is 105 yuan per share. If it grows at 5% per year, its intrinsic value is at 77 yuan per share. If it stops growing, then its intrinsic value is at 58 yuan per share. If its earning declines by 10% per year, then its intrinsic value is at 37 yuan per share. So I think China Mobile is somewhat like a public utility company. In China, the telecom service needs to service the majority of people. China Mobile is required by the state to keep investing into telecom infrastructure to ensure its service can cover majority of the country. The state will also cap the fees that China Mobile can charge from the customers, like telephone fee or Wi-Fi. Even though with its huge size, China Mobile seems to have a very strong pricing power, but it cannot exercise this kind of power due to the state's requirement. All these limitations will constrain China Mobile's profitability. Also, due to its huge size, it will be hard for it to keep a super high growth rate. So I think China Mobile will continue growing at a moderate rate, somewhere between 0 to 5% per year. Its intrinsic value is around 70 yuan per share. I hope you like this analysis. Let's discuss in the comments. Stay tuned, friends.